Today is Monday, August 26th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, Alan Bush, ADM Senior Financial Economist, and Mark Bowman, ADMIS Senior Global Market Analyst. Starting with a couple of the softs this morning, Mark Bowman. How is the U.S. cotton crop shaping up, and where do you see the crop conditions in this afternoon's crop progress report?
Well, there are two areas, Kurt, that we're looking at. One is West Texas, and the other is the Delta. Now, total U.S. crop conditions last week were running 42% good to excellent, which was the lowest so far this year. But this compares to 33% a year ago. But they are below the five-year average now, 45%. Texas was 29% good to excellent, also the lowest this year. Last year they were 10%, though. The five-year average for those is 31%. And Mississippi was 54% good to excellent versus 60% a year ago and 61% on average. The historic range for that week is 54 to 72%. So we're at the low end of the range. The reason we're watching this, of course, is drought that has reemerged both in Texas and the Delta. The drought monitor last week showed U.S. cotton production in drought at 30% of the crop as of August 20th. This was down from 22% the previous week and 13% the week before that. Back in May, it was only 5%. A year ago, we were at 32%, so we're right comparable to year-ago levels. But by late September last year, it had reached 41%. Drought conditions have expanded mostly in Texas and Mississippi. And the Delta saw hot and dry, stressful conditions over the weekend. Little or no rain expected through Thursday. There is an improved chance of improvement Friday and Saturday as well as next week. West Texas, it's excessively hot and dry there. And they've seen stressful conditions through the weekend. They have some chances for a light to moderate rainfall later this week and some cooler temperatures. But then dry weather could return September 3rd through the 9th, and this could reintroduce more stress to the cotton crop there.
We'll look for some rain in the cotton areas. And Mark, what about the sugar market? How is the Brazilian sugar production shaping up?
So the main report we look at during the season is the UNICA report, which is a biweekly report on sugar production and cane crushing and cane harvesting. And the next one will probably be released this week. These, as I said, these are twice a month. This one report will cover the first half of August. Now, dry conditions in Brazil this year have lowered expectations for this year's crop. But these dry conditions were also good for harvest and crushing initially. And, as of mid-May, center-south production was running 25% ahead of a year ago. But by the beginning of August, the end of July, it was only 8% ahead of a year ago. The marketing year begins in April. In the first half of July, production was 9.7% below last year. It recovered to only 2.2% below in the second half, though. Another thing we'll be watching is sugar share of production versus ethanol. Year to date, on August 1st, we were running 49.2% for sugar versus 48.6% a year ago. In the second half of July, it was 50.3%. And cane crushing produced 70.4 kilograms of sugar per ton versus 69.5 a year ago. We're seeing a rally the past few days in crude oil, which does improve the profits on ethanol production and could encourage more crushing for ethanol. But this is now, and the first numbers we're going to be looking at is for the first half of August. Crude prices did rally in the first half of August, but as you'll note, that it's not made new highs. It's been inside a range most of the year. So.
Thanks, Mark. Alan, looking at the precious metals markets, what's your price outlook for gold, silver, and copper futures?
Well, right now it looks like the gold may be on track to advance to new record highs. In fact, we're really not that far from record highs that were made on August 20th. So a lot of the support coming from the Federal Reserve, and especially with Powell's comments on Friday at the Jackson Hole Symposium, where he made it very clear that the Fed is likely to pivot to accommodation at the September 18th meeting. In fact, there's a 66% chance that the Fed will cut by 25 basis points, 34% probability of a 50 basis point cut. So that is supporting all of the metals, but the dominant fundamental seems to be the flight to quality influence that the gold market is enjoying. So I'm thinking gold will probably lead the way higher. Silver will probably advance as well, but I don't think it'll be quite as strong as gold, since there is the industrial component to silver that may hold the price of silver back. So I'd have to say sideways higher on silver. In copper, just a sideways trade, really no flight to quality element in the copper market, but still influenced by prospects of easier credit from the Fed. So look for new highs in gold. In fact, I would expect new record highs. Silver trending higher, copper probably just a sideways trade.
And let me throw a curveball at you here. With the almost certainty of a lower of the Fed lowering the interest rate slightly in September, how do you think that's going to affect the stock index markets?
So lower interest rates are supportive to stock index futures, but what seems rather odd at this point is there seems to be somewhat of a smaller chance of a 50 basis point cut than what had been expected several weeks ago. In fact, there was some talk that the Fed could cut by 75 basis points several weeks ago. So futures advancing at a time where the Fed is perceived to be pivoting to accommodation, but maybe not quite as aggressively. So there's some other factor involved, some other fundamental, not quite that obvious of a fundamental, whatever that might be, that is supporting stock index futures. So it looks like we'll probably see follow-through strength in the indices, and I'd have to say across the board.
Thank you. Mark Soderberg, with a major crop tour behind us and USDA updates weeks away, what will drive agricultural prices this week?
Well, first off, we do have some weather to go through yet. As everyone in the central Midwest knows, we've seen a significant warm up here beginning late last week, and that's likely to extend at least until the latter part of this week. Rains have been scattered at best. However, crop areas that could still benefit from moisture do have the best chances of getting 1+ inch rainfall totals this week, this in the north central part of the Midwest. The market seems to be taking the Pro Farmer Crop Tour estimates in stride. Their corn production forecast just below 15 billion bushels was 168 million below the USDA forecast from earlier this month. Despite this, we continue to see new contract lows with record wide spreads in the corn market or in the small grains in general. In soybeans, the market is holding in quite well considering the massive Pro Farmer forecast at 4,740 million. That was 150 million above the already record forecast from the USDA earlier this month. And we've seen a nice pickup in U.S. bean export demand with over 50 million bushels of announced sales just last week alone. However, we still have a ways to go to get on track to reach the USA forecast. I suspect the market just isn't comfortable discounting a crop quite as big as Pro Farmer estimate just yet, given the heat and dryness last week and early part of this week. We'll get some clues this afternoon, however, just how well the crop held in there with the updated crop progress and condition report this afternoon.
Yeah, what do you expect there, Mark, in those crop progress reports? Any surprises?
I think we're going to see some modest declines across the board, limited to maybe 1-2% seasonally. That's what we do see for corn and beans. The hot, dry conditions across the south and the west were likely to see the biggest declines. But recall, we had pretty mild temperatures across much of the central and eastern belt last week up until Thursday or Friday. So I look for conditions there to hold in reasonably well. Also, we had drought ratings in the single digits for both corn and soybeans going into this hot spell. We're seeing more and more states report harvest conditions as well. I don't expect the USDA to release a full composite harvest summary just yet, probably as we turn the calendar into September next week. Wheat conditions, I look for about a 1% drop there, probably the last one we see there now with harvest conditions approaching that 50% level for the spring wheat.
Thank you all. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.